Good evening, everyone. Actually, it's afternoon going on. So, good afternoon, everyone. Welcome to Officer 24/7. My name is Niharika Balia Bhatnagar, and I am with you with the area of ABFM. I hope I'm audible as well as visible, everyone. Okay, everyone, what are we doing today? When we talk about the topics that we're going to pick today, it is startup finance. Wait, start with the module D. Technically, we have almost ended the entire series with all the topics all together. Chapter wise, we are done with it. So, what are we going to deal with today? These are the few questions regarding startup finance. Startups are those organizations which are having the benefit of their work. They have their own set of struggle, but the government has been really helpful towards them as well. So technically, we can say that these are those people who get the help from the market itself. Good afternoon, sir. Okay, everyone. Acha, first of all, if you're there in the class, please go ahead and like the session. Secondly, if you're there in the class, please go to the entire playlist as well. This is almost the end of the particular modules. We are done with three modules already, and in the last module, we are currently at the second chapter. Okay, so all I can say is this particular series will be helpful at the time of your final preparation, right? Okay, what are some of the important industries contributing to India's economic growth? Agriculture and textile, automobile, manufacturing and construction, information technology and services, software development, telecommunications, etc. And then is mining and natural resources extraction. Indian economic growth is see, agri is where we had been for so long. So, agri and textile is the one which is right now under stagnation. No doubt we have made a lot of development in the agriculture and textile, but still, this particular area is not something which we can expect more growth. It has reached its saturation. Automobile manufacturing and construction, India is still way behind, and as compared to many other developed and developing countries. When we talk about China being one of our neighbors, they are very good in this. German, they are very good in automobile industry. So there are already certain organizations which are better than India in this field only, right? Tata has recently done a lot, but I would say still the economic growth industries are not these. Then mining and natural resource extraction, we have enough to only feed our country. The resources and all, they're more or less required for our country more. So mining and natural resources are normally used in our country itself. So information technology and services, this is where we are reaching out to the international areas, along with software development and telecommunication. So the correct answer is C, everyone. Got the answer? Okay. So now moving on to the next question. What are some common practices foreign investors bring to India? What do they bring to India, everyone? Relaxed due diligence and contracting procedures, limited involvement in post financing activities, focus on long term investment without concern for timely exits, rigorous due diligence, stringent contracting, active post financing involvement, and timely exits. What are the common practices foreign investors bring in India? Foreign investors play a very important role in India, Vata. They made what we are today. They play a very important role. Why? Because when the foreign investors come into India, they are looking forward towards making money through India. And even Indians are thinking about the forex coming into India would bring more money for us. You know, that's one of the basic things every organization or any country which opens itself for the world, they would be looking forward to. So in this case, it's not relaxed due diligence. You are going to make sure that if you are spending more money, it is worth it. Limited involvement in post financing activities, no. After the financing, I think we have to be more diligent because you have to make sure that your finances which are being given are utilized properly. So that's won't be the point again. Focus on long-term investment without concern for timely exits. We have to provide them a place to leave. For example, Chevrolet left India. Not only Chevrolet, I think Ford has also almost left India. There are other organizations which are planning to leave India. Automobile industry has got itself a hit even there. So all these things are happening. We cannot ask any organization to stay for a longer period if they are facing a lot of losses. So we have to do the rigorous due diligence because outsiders are coming. We have to keep our eyes and ears open. Stringent contracting, the contracts should definitely be stringent because that will make sure that there are no faults from the foreigners. And active post financing involvement. After financing, the involvement should be limited. And then we have the timely exits. Timely exits matlab the person is leaving before time. Or if they want to leave at any point of time, there are no restrictions adding on to their workforce. So the answer is D. Next question. Why do venture capitalists? Good afternoon, Suresh sir. Why do venture capitalists fill the gap left by the traditional banks in financing new businesses? Actually, no, the problem is in the traditional businesses. Traditional banks normally have one problem. They will always ask for collateral. Okay. And I'm sorry, they're providing loans. Are they providing the guidance? No. They're helping them in terms of finances, but they cannot provide them guidance. That's one of the true facts about them as well. So bank require tangible assets as collateral for loans which many new businesses lack. Yeah, because they now look forward towards equity. Venture capitalists charge lower interest rate compared to banks. That's not the point. They actually take a part of the equity itself. Then banks prioritize financing for businesses with significant prior expertise. And then is venture capitalists only invest in the businesses with established assets. Where when we talk about venture capitalists, now the difference between the two is the first one only. Banks require tangible assets as collateral. Matlab they're always asking for a security. But the venture capitalists are very cool. They will say if your business grows, one part of it is mine. And later on, what happens is if the business grows extraordinarily, then the venture capitalist will take over the organization. The co-founders are gone. And that's how the venture capitalist becomes the owner. So technically, yeah, this is what they will do. That is why they're not asking कि can you provide us some collateral or something. They're like, nahi, nahi, nahi. I want to be a part of your organization. I will guide you how to work. So that's one thing. They normally exit even ऐसा नहीं है कि they stay for a longer period or they decide to take over every organization. But yes, if there's any extraordinary successful organization, it has to keep itself safe from these VCs. What distinguishes the venture capitalist from the traditional banking in terms of the support provided to the business? First was related to the area of the loans and the finances. Now we're talking about the traditional banking in this case. How these two things are going different. Venture capital offers strategic guidance in addition to financial banking. Financial backing, nahi, banking hi aayega. Then is traditional banks offer high rate risk in investment opportunities. No, venture capitalists focus solely on providing financial. So traditional banks prioritize long-term partnerships with the business. How are these two very different? These two are different on the basis of A. Venture capital offers strategic guidance in addition to financial backing. Matlab, this is financial backing only. They are helping in terms of they are providing them money, but they are also raising them. That is how they are totally different from the banks. Banks will provide them a loan and then bank will move away. That's the work of the bank. But the venture capitalist will still be there and will be guiding you. That's why once he has been involved too much into an organization, then he would like to stay in that organization. Okay? What are some key characteristics of venture in capital investment? Minimal financial burden on the aided company and long-term partnerships with venture capitalist, then a high level of risk tolerance, active interest in leading the company, and exit strategy within 3 to 7 years, strict terms and conditions, substantial financial burdens on the aided company and no exit strategy, limited involvement in the aided company operations, and passive investment approach. You really don't do that. You have to be active. You cannot say this. But yeah, you will have an active interest, but you will decide that after this particular period of time, I'm not going to stay in this organization. You are not supposed to stay. These are just helping hands. They will make their money, and once they make their money, they will sell away their equity part as well, or they will not be actively involved in the organization. So the answer is B. They have a high level of risk tolerance. They have active interest in leading the company, and they exit strategies within 3 to 7 years. Then they will be building up another organization in a better way. Then everyone, moving on to the next pointer. What are shared characteristics between private equity and venture capital? Pata, what do you mean by private equity? Private equity is basically related to the area of one particular person to whom we choose ki we are I want to give you the shares of my company. I know you personally, so I want you to be a part of it. While when we talk about venture capitalist is basically a random person who has, he's not actually totally random even. This person has done a good homework of our organization. We have done a good homework of their organization, and we are seeking funds from them. So when we are looking forward towards seeking funds from them, that will be included in this area. Okay? So in this case, limited autonomy and reliance on the public funding and passive management, active oversight of invested enterprises, significant financial incentives for managers, and establishment as autonomous pools of capital. Okay, both of these areas, be it private equity or venture capital, that's one of the organization's ways to raise money. Restrictions on activities, the lack of investment agreements, or and reliance on the general public, or passive involvement in invested enterprises, and absence of financial incentive for managers. The difference between what are the shares that is shared between the two? When we talk about these two, na, they have a few things in common. Both are ways of generating money for the organization. But what they do is they have an active oversight of investment enterprises. Both of these are not going to overturn their investments in a day or two. It will take time. So that's why they always have an oversight of investor activities. Then significant financial incentives for the managers would be there, and establishment as autonomous pools of capital. Then everyone, what's the answer to this? The answer is actually B. Now, how are these two different? That was their common point. How are these two different? Private equity investments primarily focus on equal early stage business, and then primary equity only prioritizes the long term partnerships with the business, or private equity investment may involve restructuring financial operations or planning around planning. Private equity investors typically provide the minimal financial support to the aided companies. They don't really do this. Once you deal with the money, then you have to find a way. You know? The answer in this case would be private equity investment may involve more restructuring. The restructuring part of the private equity is way too much as compared to others. That's one particular part which is definitely there. What is the purpose of screening process or in venture financing? You decide to give money to an organization. You won't go through the particular details of the organization. You will know. One of the screening processes you will find at Shark Tank India. Before they come in front of the sharks, their businesses are basically studied by the people who are working with the production. Then their screening is done. Then the particular persons who can go and stand in front of the camera would be chosen. You know, the ones who really have the specific, I would say, the caliber to finalize the deal negotiations, to establish a business relationship with the entrepreneurs, to evaluate and categorize potential ventures of investment or formulate the exit plan. You can't think of the exit plan. When you're looking forward to screening processes, you have to look into the investment in a proper manner. You have to look into the investment whether it was worth it or whether I should go for it even or not. Isn't it, everyone? Investments cannot be something that you and I can say, oops, I made a mistake. कोई बात नहीं चलता है. We would be under a very big trouble if we make a very big mistake. Isn't it, everyone? That's one of the basic things anybody can face. Now comes the what is the primary goal of negotiation process in venture capital financing? To secure maximum profits in venture capital, to establish a win-win situation for both the parties, to ensure complete control of the entrepreneur, or to minimize the investment amount required. The venture capital is always looking forward towards that organization to grow further. So technically, he's looking forward towards a win-win situation for both the parties. Matlab both the entrepreneur as well as the uh, venture capitalist. See, if the organization makes money, then both of these would be having their own set of incomes as well. So technically, this thing will be definitely more helpful than anything else. You know? Done. Now let's move on to the next question, please. What role does the venture capitalist typically play after finalizing the investment? Hands-on involvement in day-to-day activity operations. Then we have limited involvement, only intervening in case of potential financial loss, full control over the company's operations, or sole decision-making authority to regard business strategies. What's gonna be the answer, everyone? When we talk about the venture capitalist, in this case, the answer is going to be limited involvement. You will not have unlimited involvement and only intervening in terms of potential and financial losses. They have their working defined. But yes, do they provide strategic information? They do. They provide them the money. They look forward towards the overall growth of the organization, but they can just give suggestions. Then everyone. So in this case, the correct answer is limited involvement is required, only the intervening in case of the financial loss. When there's a loss, I will come up or you can come up to me. Depending upon that particular situation, they make this. ठीक है ना? चलिए, that's it for the day. But before I end my session, have you reviewed our courses yet? If you haven't, then please go ahead and check it out on our website or in our app for further details. Go on to our website, that is www.adda247.com. Go on to the area of the website there. This is what you will find. If you go down and you will click on the area of JIB and CIB, you will find the CIB June 2024. Our new batches are starting from 13th, from this is 15th. So you must have seen the particular batches started on 13th. So this is our English medium batch. If you're planning to buy the English medium batch, you can have 78% discount. All you need to do is use the code Y541 and you will get the discount more than the 75% discount which is given here. So if I apply this one, the answer would be 5519.77. So this would be your amount that you will have to pay for buying the particular CIB, all the compulsory subjects. So if you're planning to do it, then kindly check it out on our website or in our app for further details. Till then, I'll be meeting in the next